Ladies and gentlemen, I am JC Peretz, and I am thrilled to be joined by my man, Jeff Macke. Jeff, say hi to the folks.
Hi, folks.
Listen, we were just talking off air. This is fun. This is so fun that we get to do this. And, our predecessors never had these opportunities to sit down, with somebody who you respect, whose opinion and experiences are very different than yours, and we can have a conversation about the same stocks that we're all looking at, but you look at it from a completely different lens, and I have so much appreciation for that selfishly, and we get to just hang out and talk about the consumer, baby. The consumer, 70% of the economy. I'm no economist, but is that the number? Is that really what it is?
That's the number if you trace it all back. It is a very big number. And, I'm not sure how to look at it other ways. So I appreciate the sentiment of this being like a unique special flower approach to things, but I don't know how to do stuff other than this. I see the world from the consumer backwards. And if a product doesn't really have kind of an end customer who's going to play with it, use it, eat it, figure out how to do it, or call someone up to get a ride from them, I'm really not able to kind of wrap my mind around it. And so what I'm doing all the time is just collecting evidence as a start point. I want to see trends. I want to see what the kids are doing, what the people are talking about, products that are making the leap from one generation to another. That's what I'm interested in. And man, the ebbs and flows, no one's more kind of psychotic than investors, except maybe consumers. And so you end up with these hyper levered names. I mean, look at Crocs. Freaking nursing shoes that are 20 years old and have been dismissed as a fad for the last quarter century, up 25% today. 25%. That's a real move in anybody's world, man. And that was basically just built on skepticism going into the number, the fact that Deckers kind of took the steam out of the entire shoe industry. But that's a huge trade. There's just people kind of squinch up their noses because overall, if you're 70% of the US GDP, JC, you're not going to move much in terms of really outperforming one way or the other. But there's always just enormous winners and losers within this space. And that's where the alpha is, man. That's how you make money. I like a nice little basket, and I want to focus on it more than other people, and that's what I do.
And one of the things that you are really good at, better than anybody I've ever seen, is sort of breaking it down in a simple. In hindsight, it's so simple, but you wouldn't think of it otherwise. Where you talk about a company like Nike, for example, huge monster, great American brand, as Steve Strazza likes to call it, just like a huge American company. Everybody knows it. But what happens is that you have competitors, quote unquote, or, other companies in that space that are way smaller. So you talk about Nike maybe dropping 1% or 3% or 5%. That's a 40, 50, 100% move in the company that's benefiting from that slight decline in the behemoth, right? It's a huge move in the other ones. And, when we talk about it, it's like, oh yeah, duh, common sense. But, until you really put it that way, I hadn't quite thought of it like that.
And it repeats over and over again, JC. The first company, probably, or the most notable company, a lot of guys have taken runs at the king over time with Nike. So you've seen Reebok kind of rise from the ashes. You saw Under Armour come up, and they all get the shot at it. Lululemon's probably the favorite example I have, because that was really a long time hold for me. They came out with athleisure. Nike should have owned that right from the jump. From the jump. And so, there is a limited amount of money to be made kind of shorting Nike, playing with Nike. But if you go second derivative and just say, okay, they're not great at clothes. They're branding everything Air Jordan. He's becoming increasingly kind of less relevant, and they missed yoga pants. Holy crap. If you're Nike, how do you miss yoga pants? So there's just money to be made. You just got to think of it second, third derivative of okay, who's winning from this trend? Give me a trend and let's just kind of poke around with it and figure out who wins. In a case like Nike, that's a $55 billion company. So if you're On Holdings, this little Swiss startup, Roger Federer, and they're doing just weird stuff in the Swiss Alps with cool shoes. You see that kind, it's all of a sudden you go to the bougie clubs and all the hot moms are wearing them. That's a data. There's a data point. Look at that. That's
all right. Hold on. So let's take a step back for a second.
Yeah.
Okay. So you're analyzing these consumer trends, and these consumer trends persist. Like the prices of assets, consumer trends also persist, right? Would you agree with that? That's something I've learned from you.
Sure.
And so you, as great as you might look in tight yoga pants, I can't imagine that your you seeing this particular trend came from your own behavior habits. You talk a lot about, like in this case, you're talking about the hot moms. You watch what other people are doing. Like how are you, when you say you don't think about the world in any other way, this is how you think about the world. What sorts of tactics do you have for areas that you're not an expert in? Like Dick's Sporting Goods. You can walk in there, you get it. You're like a dude, athlete, like your kid, right? But like, what about other stuff like Victoria's Secrets and like other things?
It's about kind of not being afraid to go in there and doing the research where you need to. Victoria's Secrets, I had to kind of outsource some of the research on that. But something like a Lululemon, man, I'm secure enough to go into a yoga shop. I don't really care what people thought of me. So 10 years ago, I'm living in New York City, and I realized this company, Lululemon, that makes the tights, they also have pants that breathe. And so, it's you've lived on the East Coast. Wool and denim are not the two optimal choices that you'd want to swaddle your nuggets in all summer long when it's 95 degrees and 85% humidity on the East Coast. I was, once I tried on Lulu pants, realized these things breathe, they move, they flex. And all you got to put up with is that someone's going to tease you because they aren't made out of wool. Well, I'm fine with that trade. And so then it's just a matter of okay, we got to get the wives to get their husbands into the stores. And as that takes hold, well, all of a sudden now Lululemon's about selling $4 billion worth of menswear. It's growing faster than women's. That's a whole different category that they were able to get into. And all just because, again, Nike missed it. It should have been Air Jordan stuff, but it wasn't. They reinvented the pant. Now athleisure is just pants. And Gap on their most recent conference call, they said this is going to be a $70 billion a year opportunity. Just athleisure. Stuff that was regarded as spandex tights for men of rather less masculine bearing, 5-6 years ago, now is just mainstream absolute clothing. And if you catch trends like that, there is a ton of money to be made. You can see who's doing it well, who's doing it poorly. You can get long, you can get short, and just terrific moves. Lululemon's been a 10-bagger. If you bought it back in 2013 and you rode it all the way up, it was certainly bumpy. But they were able to take enough share, make enough profits that became one of the best success stories that you're ever going to find in retail.
One of my favorite parts about the consumer, first of all, there are so many of them, right? There's so many consumer stocks and retail stocks, and the consumer has its fingertips in a lot of things like Uber, on paper is a transportation stock in the industrials. But through Jeff Mackey's eyes, it's a consumer stock. The consumer uses it, right? So it goes beyond quote unquote consumer discretionary into other areas as well, which is fantastic. Another thing that I really love is the ability to just understand what they do. They sell pizza, they sell shoes, they sell cheeseburgers, right? Like this is not complicated stuff. They sell yoga pants, right? Like it's not like this drug for some cure for a disease I've never heard of, right? Like all that stuff is great, but that's impossible for me to understand. Oh, they sell jeans. Got it. Done. Next, right? And then you go on and dive from there. But of all of the things that I must say that I love the most is the ability to find both longs and shorts, right? It goes in both ways. In the healthiest of stock markets, there are shitty stocks that just won't go up and they'll just keep going down. And in the worst markets, there are names that are doing well and really shining, and those could be grocery stores. Things like Walmart and Costco are technically consumer staples. But so can you talk to the winners and losers always, no matter what?
Oh, absolutely. You mentioned Walmart and Costco. Walmart, Costco, and Amazon are they're the Cerberus of all things retail. They're just the guardian standing there from anyone else making money because they've become just so huge and such an enormous part of what the consumer is doing. I don't really care if someone's going to call them staples, discretionary, whatever. I'll tell you what Walmart did. They figured out how to make the leap into a little bit of Target space. And they got a slightly higher end customer. And they've also been able to use their scale to start emulating what Amazon's been doing. We've talked about Amazon before. They're kind of a retailer, but they're pretty shitty at retail. And it turns out they don't make much of their money from retail. They make a huge percentage of their top line, not much of their bottom line from retail. They make the rest of it from doing services, from doing Amazon Web Services, and incredibly lucrative. They own football, they own all kinds of stuff.
So then stop. So Walmart is Walmart, Costco's Costco, but Amazon's a few different things. So how do you think about it from a consumer standpoint? Are you like taking their earnings reports and focusing on just a consumer segment and getting information there? Or do you consider the performance of the stock consumer related? Like, how do you think about something like Amazon?
Amazon, it's become so much part of our lives, JC, that people don't even think about it anymore. But if you consider what Prime was when it first came out, it was 2 days shipments on some stuff. It wasn't even a product. It wasn't even a thing. They got people to pay $80 for this thing that was just like, some of your stuff will get there a little faster. Now Amazon's routinely doing same day delivery. Same day. You order batteries in the morning, and all of a sudden they're on your porch in the afternoon, and no one really even thinks about it. That changed the entire game. They spent billions and billions of dollars for years. Amazon, the rap on them was that they didn't make any money. This company's never going to make any money. And their S1, I wrote about it for the site. They said right from the start, we're never going to make money because we're always going to look for places to dump cash every chance we get because we're going to build the preeminent brand. And at the time, we're going to redefine the online bookstore. Well, they did more than that. They redefined the online bookstore. They redefined FedEx and UPS's future. The United States Postal Service now just delivers junk mail and nothing else because Amazon took over the entire shipping.
Let me ask you this, Jeff. When it comes to like a situation like that where people just assume it's a bookstore and they just get it wrong, but the price of the asset was pricing in all these other things that the business was going to get into in the future because, of course, the market is a forward-looking discounting mechanism. Something like a Tesla perhaps being thought of as a car manufacturer when perhaps it's a whole lot of things through the lens of like a consumer guide to the point where you say you can't even help yourself. This is how you think. Like something like a Tesla, for example. How do you think of it? It's you don't. I take it you don't think of it just like as a car company, right? Like, how do you see that?
It's an option on doing other things. Tesla's a good example because it's Elon Musk. You can love him, you can hate him, and you can do a little bit of both. But you know what? The guy is absolutely incredible at inventing stuff, managing things, and getting engineers to do just magical shit. Yeah. I want you to create just this huge, skyscraper that catches rockets as they land. What the sweet love is that? I saw in a James Bond movie. I was super high. I want you guys to do this. A lot of people might have actually suggested that their engineers do that. Not a lot of guys are going to figure out how to get them to do it. And Elon did, so the guy's rolling. I've had people for over a decade tell me how amazing he is. Yeah, it's
like an extra option. You look at the consumer aspect of it, and then that there's this other stuff over there that could also take off, like an Amazon, like a Tesla, and there's other names probably similar to that, right?
Let me tell you how I wrote about Amazon when they missed just the other day, right? They missed because they took their guidance down because they're going to invest so much money. Now, we just mentioned that in their very S1, which is the document that you file before you even take a company public, Amazon said flat out, we're never going to make cash. As long as there's something we can invest in, we're never going to do it. We just talked about Prime.
They're sticking to their mandate.
In 15 years, Prime has gone from not even a real product to freaking 200 million people are paying for Prime. And that's how you watch your NFL football on Christmas. I mean, it's just part of the infrastructure of America. These guys have earned the right to allocate their capital. Elon Musk, if he's going to tell me that, we're just going to do freaking, Tonka toys. That's what we're going to do. We've decided that's what the market is. You might laugh at him, but it's like, that he's probably not entirely wrong. He took over NASA accidentally.
You make a good point. Like you're outsourcing the allocation to proven asset allocators. In the case of like Berkshire Hathaway, for example, they've never paid a dividend. They could, but they never have because Warren Buffett thinks he could do way better with that money than you can. And I'm good with that. You know what I'm saying? Like fair. Okay.
Right. I'm cool with that. So I worry about Amazon. If they paid a dividend, that would scare the hell out of me. That would just be like, no more worlds to conquer. All you guys do is conquer worlds. You are
you go do it. You go do it. You're good. Yeah. We don't want to do it.
Shiva, man. You are the creator and destroyer of worlds. You're telling me they're going to give me a dividend? What the hell am I going to do with the money? You go invent another Prime. God damn it.
Yeah, let's go. To the moon, baby. Let's go. Yeah. You want rockets? Hell yeah. Let's go.
Hell yes, exactly. I'm not owning a stock like Amazon because they're going to give me some huge divvy. I'm ordering them because they're going to redefine the future of how people do stuff. Uber redefined how people do stuff, and so the idea that there's going to be these autonomous driving taxis and the interface that everyone's used to, the way that freaking 90% of the car ride service ordering world just thinks as synonymous with getting a ride is not going to get a taste in that is ludicrous. that consumer interface matters. Again, the Waymos of the world, the Teslas of the world, hey, it's great, but they're not going to have an entire kind of vertically integrated thing that's going to take out Uber. Uber makes a ton of cash, and they're synonymous with how people are getting to and from almost everywhere.
What about Google? So Google's a consumer stock too? Because YouTube and all that?
As far as I'm concerned, sure, but not everyone's going to see it that way. And the Google Labs, God knows what they're up to all the time.
Right.
But it's you can work backwards. You have the YouTube TV. Look at the way that's kind of it's who doesn't have that?
As a consumer, I love the YouTube TV.
Exactly, and man, they jack that price up, and a lot of the companies that we're long. We'll get into it, but some of the stocks that I picked for our service so far, are companies that are just charging subscriptions that are tremendously sticky, that you really don't think about, that are just kind of part of your daily life. Netflix is that way. I'm long at my personal account, not long at the portfolio, but Stitch Fix is that way. Peloton's that way, where the companies become a joke. But you know what? They have 3 million customers that pay them $45 a month. That's a pretty good business.
When we talk about like our behaviors and stuff like that, and sort of the Peter Lynch model, right? For those of you, what is it? One Up on Wall Street? Give it a read.
Yeah. With the idea of and he said it himself. That's your starting point, right? Like if I walk in and there's a big line, that doesn't mean this is the most popular place in the world. There's it could mean they're going out of business and selling things below cost. That's another way to make your store crowded. You start your research with what people are doing. You start your research with the trends that you see, and you overlay some math, you overlay some technicals. I'm kind of just the Rosa Trulli in terms of any strategy that works a little bit. I like to kind of dabble in all of it and be out there. But if you get a chart that works out for me, a trend that I can see manifesting itself, and smart management, I just want to be long. I want to be long. And if
that makes a lot of sense.
Self-destructive, stupid management, get me out of there, get me short, or tell me who's going to take them out.
All right, so we got 3 names that we're going to talk about. We won't divulge Jeff's portfolio today. That's coming. So if you're interested in the portfolio, stay tuned. Today we're going to talk about three trends that Jeff wants to talk about in the consumer. And again, one of the things that I love about this is that we know, as it's the reason that we're called technicians, is because we're analyzing the behavior of asset prices, and we know that asset prices trend. So if you're not analyzing the behavior of asset prices, like, what are you even doing? So like even someone like Jeff, who is an expert at analyzing the consumer, the first thing he says is show me the chart. Like the market needs to agree, right? Just because Jeff is into yoga pants doesn't mean that the rest of the world agrees. As it turns out, in fact, they did. But price is the only thing that pays, and Jeff knows that very much. Why don't we start with the bros? So these are the Dutch bros. First of all, shout out to Amsterdam. I don't believe this is actually a Dutch company, but Amsterdam did close at a new all-time high today. So shout out to the Dutch.
And a Dutch oven doesn't have anything to do with coffee either. I'll be honest. People can Google that themselves and maybe get the.
Don't do it to your wife. It's rude. It's rude to Dutch oven your wife.
It's offensive behavior. And to be honest, I find most of the products just not quite to my taste at all either. But you know what? This is a great example of.
Is this a West Coast brand? Because I don't see it in the East Coast, but I used to see it in California quite a bit.
Yeah, they're doing a regional rollout, meaning they're kind of taking over sort of area by area, which is a pretty smart way to do it. Their tailwind has just been the kind of lassitude of Starbucks, the absence of really any motivation, and kind of just until very recently, Starbucks has just been operating blind. And Dutch Bros has moved in there. They were. It's a theme I would come back to over and over again. A darling stock during COVID. Everyone loved Dutch Bros because they were drive-throughs, and no one wanted to go to the Starbucks, and they kind of thought they were fad. The stock got absolutely murdered post-COVID, but it turns out they've got a nice little model, and younger people like this kind of coffee more. All the kind of trendy grenadine, super hyper energy drink bullshit that I can't even get myself to swallow because it tastes so sweet. But man, there's a line full of people in every Dutch Bros lot just kind of waiting to get served, and they're doing smart things, just growing their business. So,
and it's just a regular. I don't think I've ever even been. Maybe I did when I lived out in Sonoma, but What is this, a regular coffee joint, right? Drive through?
It's kind of regular coffee joint, but they lean towards more of the kind of trendy things that drives everyone nuts if you're an actual commuter who's just trying to
Like
inject
what?
caffeine.
Like what?
It's you want something super sweet. You want a little pink drink. You want some boba. You want, it's a little foam smoothie type of thing.
Boba? These are new words to me, Jeff.
They're new to me too, man. Come on, I'm an old man.
Yeah, but clearly you've been doing your research. Clearly, you're like showing off new words I've never heard.
Right, because I'm the old guy in line at the freaking Dutch Bros. Is going, what's a boba? What the hell? How do I get an iced coffee?
Why are all the kids? All the kids are coming to this place. What is happening here?
They love it. They're taking share, man. And the beauty here again is they're 1/36th the size on a revenue basis of Starbucks. And so it doesn't take a lot of share loss from Starbucks for Dutch Bros to do really, really well in the areas that they exist. And so they're stealing the better parts of Starbucks playbook by adding things like mobile payment stuff that they're getting their customers into. They're appealing to a younger customer base. They're doing primarily drive-throughs, so that they're much more cost effective. They don't have any of the problems of people kind of using their bathrooms for God knows what. And they're just posting numbers. 8% short interest coming into it's their last quarter. They annihilated numbers, and there's just nothing to hate about them. And so at this point, again, you've got what people regarded as a broken story when it was 30, and now they're going to be forced to cover the stock when it's 80. Just an incredible move today. And it didn't take much. They pre-announced, or they forecast about 5% comps next year, which, as it turns out, is sort of the inverse of Starbucks when they say we're going to be down about 1%. So, they're just taking a little share. If you're 1/36 the size of Starbucks, if you take a tiny bit of Starbucks share, that's going to be doubling your revenues. That's going to be just a huge boon for them. And again, we talked about winners and losers. Starbucks isn't the short that it was 2 years ago. I mean, that's been an incredible stock year to date. I'm long the stock. I wish I was long a lot more Dutch Brothers. But in the meantime, there's plenty of room for more than one group to win. And these guys are just sticking the boots to the competition and the shorts.
Speaking of competition and shorts, with Nike, struggling for quite some time, there have been some huge winners. We were talking about before how, 1, 3, 5% decline in Nike means 30, 50, 100% return in another stock. So here we're looking at Nike's competition. This is an equally weighted chart of Deckers, Adidas, On, right?
On Holdings and Skechers. Yep.
And Skechers.
And so On is just a terrible name. The actual name of the company is just On, which I can't wrap my mind around. So I just kind of call it after the
yeah. Now that you mention it, it is pretty stupid. It's a pretty stupid name, On.
There's a lot to really not like about it. It's their earliest ads had like Roger Federer kind of dressed in a scientific lab suit, and he's helping design shoes. That seemed implausible to me. But I tell you what, it's a kick-ass brand. And I tell you what else that they have going on. That was one of the keys that got me long Abercrombie & Fitch pretty early and pretty lucratively was On's been able to go from just the bougie hot moms to the men. I wear them for my golf shoes, wear them all the time. I get compliments on my shoes. Men don't compliment each other on their shoes very often, JC.
You're getting compliments on your Ons, because I go to the tennis lessons at the club, and it's not that bougie. I guess it's a little bougie, but I wore the On-Ons, and the guy was like, "Oh yeah, those are good." Like,
right. Which is just it's a little jarring. It's a little like, thank you. I'm glad you like my shoes. It's because if you compliment like your shorts, it would have been weird.
My wife's on a third pair of On-Ons. Why? Because we were trading the stock. What happened was, truth be told, we were trading the stock, and then I was doing a conference call with our clients, and they're like, "Oh, JC," because we were buying On, and I didn't know anything about it. And we were just trading. It's just letters and math, right? And they're like, "Oh yeah, they make great shoes. You got to try the shoes." And I kind of felt a little bit like an asshole because I didn't really know what they were talking about. So I went out of my way. I bought a pair of the shoes with some of the profits we made on the stock. I tend to do that a lot. And then so
I do that too, man. That's my lifetime scholarship of Peloton. It's all just basically.
Dude, I own real estate in the metaverse because I use some of the profits from the Mana coin. So yeah, I got
you're a Farmville kingpin.
Dude, you don't even know. I'll tell you. I got stories for days of random shit. I got a robot dog on its way to my house. Thank
God. Finally.
right? What could go wrong? Chinese
Nothing.
manufactured robot dog. See, that's a consumer stock right there.
For sure.
We made some money on the auto. I invested, and my wife was like, "Why are you buying another pair of shoes? You don't need another pair of shoes." I'm like, "Oh, it's research, babe." She's like, "Well, I'm gonna buy a pair." I'm like, "Yeah, buy a pair. Let me know. Let me know what you think." Right? And
Sure.
she's on a third pair. She loves them.
And you know what else? You know what else loves them is my kid, who's a D1 college athlete and is a super shoe snob just because he does crew and those guys are just insane cardio heads. He's not putting anything on his feet that he doesn't think is at least a little bit cool and a really good shoe. Because otherwise he's gonna be in pain and look like a d-bag, and he doesn't like either one of those things all that much. But if you're able to capture the hot moms, guys like us, and our kids, that's brand magic. That is absolute brand smoking hot magic. And so this is a company that I think has the potential. Not every company that does is going to make the leap, but these guys could be a Lulu. They're trying to expand into stores. They're going to expand into clothing. It's going to be a little bit of a bumpy ride. That was that way for Lulu. People don't remember, it's 8-9 years ago. That was a much bumpier stock, and it was in the mid 50s to the 30s, kind of chopping around in there. It takes a while for these stories to come together. So I don't expect this to be a tepid ride, but I think that they have the best shot, at least until Vuori comes public, which is a private group out here that's also going after Lulu. But we mentioned the athleisure industry being $70 billion a year. On's coming for it, man. And it starts with cool shoes. If they can make the clothing work, that's going to be great. In the meantime, you have a stock that you can buy on dips and pullbacks, and it's not going to become a tired story. They still have just all kinds of worlds to conquer, and I love that. I love the idea of it seems overvalued, but all the growth stocks seem overvalued. They're never cheap. You're never going to get a great shot at them. But when you do, it's time to just kind of hold your nose and take a bite at the tip.
If you want cheap, there's plenty of value traps out there. One of the great Jeff Macke quotes ever. I absolutely love it. It's what is it? Value investing is a marketing term, not an actual strategy. Oh, classic.
It never occurred to me any other way. I mean, of course it is, right? That's it. It's obviously just a marketing term. It's obviously just like we're long a bunch of boring ass stocks. They're value plays. I mean, tell it to people who are long Target. 14 times earnings because they've just been complaining about Costco and Walmart's multiple for the last 3-4 years.
Right. Go up, baby.
Yeah, I grew up in Target, JC. I grew up literally in Target. No one wants Target to win more than me. Target's worth about 14 times earnings, and Walmart's worth a lot more than that. When Target gets its shit together, I'll be long. But until then, no thanks.
Right, exactly. We got one more name that we're going to talk about. But before we get to that, you mentioned your stud athlete son. You mentioned hot moms. Is there a specific segment of humans that you look to as a leading indicator, or is it more industry specific? How do you think about who you're observing?
I'm looking at how good a company is at capturing the customers that they should be able to capture. Let me return to Target because
Skechers, for example, Skechers is not hot moms. It's a different.
Nope. And kind of part of their misstep was, it always looks like a red flag in retrospect, but they opened up a performance center. They've got a Skechers performance center, and it's what does that mean? Skechers.
What does that mean? I was going to say the same thing. What is it?
70-year-old dad. I'm throwing a ball for my dog with one of those catapult things. I'm hitting putts. I'm not sure what a Skechers performance center is, because they should just be selling shoes to Tony Romo. I'm Joe Montana for Skechers. That's really kind of their core niche. I don't see them. They might have some problems going out into the broader universe.
So it's their ability to convert their target audience, whoever that might be.
Right. And you walk in, again, talking about Target. Target they were the first kind of discount stores to go out to upscale middle-class neighborhoods. And the way they did it was they made them clean. A Target store is clean. And that was the idea. Rich people like discounts too. They just want to buy it in a clean store. So Walmart was chucking feed bags on the floor, largely cement floors. Target made them a little nicer, played a little music, and they offered really good prices. And that was just a magical formula for a long time. They lost their way a little bit, but when Target's working, what they did was they delivered better values than you expect to get in that location. It's I don't expect to get the same service when I walk into Walmart that I would if I walk into Saks. But you know what? When I walk into Walmart, if a guy smiles at me and says hi, and the place is clean and it looks like a nice, safe place to shop, that's an upside surprise for Walmart. That feels good. And so it's all about addressing who that target market is and how good a job the company is at nailing it.
All right, hard pivot from Walmart to Restoration Hardware.
Restoration Hardware.
Right? Is that R, or do I have that right?
That's what RH, yeah, that's the former Restoration.
They changed the name. They changed the name just to RH. Speaking of stupid names, right? Like, why couldn't they just keep it Restoration Hardware? Why is it RH?
It's who knows? Who knows? It's honestly, if I understood half the things these guys do, you know what they do? They're going into housing communities. They're going into European stores. They opened a enormously expensive kind of a retreat / furniture store about 60 or 70 miles outside of London. And it turns out business isn't that good because there's like 500 people in the town. They bought this party site. They've got a store going up on the Champs-Élysées in Paris just because the French are just hanging out waiting for Americans to show them what taste looks like. They rent private jets. They do hotels. They do all kinds of things. But ultimately, it's a furniture store. And this stock,
they've got restaurants. They've got one like in Napa.
Yeah. And by all accounts, the restaurants are really nice, but that's not the same business. And so the idea that that's going to be something that you can kind of morph into is a little bit of bullshit. They make up kind of accounting metrics where they don't grade themselves on revenue. They grade themselves on demand, which is a much more abstract term. It's a nuanced difference, but demand is just the idea people might want your stuff, but they haven't ordered it yet. Whereas revenues would be they actually paid for your stuff. They make big, expensive furniture for people who are sort of rich, not quite super rich. And it's a pretty limited market. Renting private jets is a limited market. There's an exceptionally, really expensive stock that's entirely reliant on a housing market that's probably never going to come back for them. So, it's.
And what does that mean, housing market? What does that mean, housing market is not going to come back?
Well, very specific. So you're talking super high-end luxury homes that they need furnishings right now. It's Restoration Hardware. Their perfect market was COVID for them. COVID, like a lot of these companies, was absolutely ideal because everyone redid their house. Let's get new couches. Let's get new everything. Furniture.
And the stock did great.
The stock did great. They didn't make a ton of money, but the stock did great. They took all those proceeds.
It went up 10x off the COVID lows.
It did, and which Gary Friedman, the CEO, who is bonkers, like a lot of retail CEOs are, and in a good and bad way. But he said, you know what, we're going to climb luxury mountain, baby. We are going to build a brand. He wants to be the kind of Louis Vuitton of furniture. But the problem is it's really hard to get those margins for furniture. They make a lot of kind of gray, big, heavy furniture that they haven't really thought through all the way. They own property in Aspen that's been in construction for about 4 years. That's a huge problem. They got debt overhang. It's a tricky short, but this thing is just working its way lower. Like we said, there's winners and losers in all these tapes. These guys are just in a little bit of trouble. Contrast them with something like a Best Buy, which on paper has kind of the same problems, right? Everyone upgraded their TVs the same time they bought themselves a new couch. But what Best Buy's been doing over the last few years is becoming a much, much better retailer. And so once you get into that refresh cycle on the product side, Best Buy is going to be doing pretty well. Not yet, but these are two companies that you would figure would have a pretty strong Venn diagram overlap that actually are going in completely different directions. Winners, losers, longs, shorts. There's a reason I live in this house because there's money to be made.
I love it. Winners and losers. Can you go to that last slide? Jeff included. I was like, Jeff, what is this? He's like, well, just holy shit, what a day, right? So this is the holy shit, what a day slide.
It was a flight to stuff I own type of day, which is just talk about a rational market. People can criticize it all they want, but this is a flight to stuff I own day is beautiful. It's Peloton up 10%. I'm not sure exactly why. It's the same company it was, but you know what? We talked about right before earnings when it was 7:30. I got long in my own account. I got long in the kids' account, and now it's over $10. Or that's a pretty good move. That's real money. I'll take it. And people like to kind of cast a discerning eye. They like to be really skeptical of these consumer stocks. These look like real moves to me. There's a 1 day price action. Stitch Fix is up 30% for the year. I'll take it all day and twice on Sunday.
Nice work, Jeff. By the way, guys, if you are watching on Stock Market TV, scroll down to get on Jeff's retail roundup email, get his live feed of what he's thinking on a regular basis. If you're watching on YouTube, click the link in the chat. And if you are watching on Twitter, I will retweet the sign-up link. I guess that's what I'm doing. I guess I am retweeting the sign-up link. If you are on Twitter, if you're on YouTube, click the link in the chat. And if you are on Stock Market TV, scroll down for Jeff's retail roundup. Jeff, before I let you run, I did want to take a few questions. Spencer said there were some questions in the chat. Spencer, are you there? The voice of God, the John Facenda of technical analysis?
The autumn wind is a raider. That's beautiful. The John Facenda reference is nice.
You like that, right? In the frozen tundra of Lambeau Field.
Absolutely. Usually talking about my Vikings being horribly disappointed in the 1970s.
The Purple People Eaters.
Goddamn, they were good. They should have won so many of them, JC.
Are we there? Are we there, Spencer?
Yeah, you guys are good, man.
Any questions from the chat?
Yes, we do have a few.
Jeff.
Since you ask, what do you think of the Gap, Jeff?
Love the Gap, long the Gap. Love a new CEO. It's this is the Starbucks thing. This is kind of why I like to pay attention to the people. I was a psych major with a film studies minor in school, so this is not a natural thing for me to be doing in terms of in terms of investing. But I come at it from a people perspective, from a social perspective, and Gap has been needing a new CEO for ages, as long as I can remember, really since Mickey Drexel left, which was like 15 years ago. Gap is one of the all-time specialty stores, got as high as $50, $60 in 1999, has never seen it since, but they still are one of the biggest specialty retailers in the world, $15 billion base. Hold on, I got a call. And I think the new CEO is giving the company fixed metrics and goals that are actually realizable, and he's relating to the street in a way that he's going to be beating estimates for the next few years. And it's that can go a long way. I think Gap moves at least to $35 probably this year, and I really feel pretty good about it. I've been burned on Gap before because they've been trying to turn around for a while, but they've never had someone with kind of this vision, this conviction, and this level of buy-in from the rest of the team. So if Gap is salvageable, this dude's going to do it, and I think it'll happen this year.
Spencer, can you throw up? Can you up that last slide here? I'm dropping it in. I'm glad you mentioned Gap. Jeff, is there any reason for this correlation here in this slide? Can you see that? Is there any reason?
I think you're making a Yee reference there.
I'm just asking if there's anything there. I don't know nothing.
I believe the part where both stocks bottom, Gap in one of its really, in a long list of bad ideas, this might have been the worst one. They decided to hire Kanye West to be in charge of all of their stores. They liked his work with Adidas and just were going to give him free reign. He ended up putting brand new merchandise in oversized garbage bags on the floors of the Gap stores. It didn't go over that well. It was an exceptionally bad idea, but he set the bar nice and low for the current CEO. Adidas got rid of him. They stopped selling Yeezy stuff. They marked it all down to zero, and then they went and turned around and kind of have quietly been selling their back stock of Yeezy stuff.
Both companies have been excelling without Kanye West. I can't imagine why. I can't.
It didn't seem like a headache. Kanye used to go into Adidas and show them porn and just make all the execs watch porn with him, which made no sense. But once they finally broke up, it turned out that Kanye was making like $1 billion a year top line for Adidas. It was crazy the amount of cash that he
they're
was
like,
generating.
you want to sit around and watch porn? Sure. Whatever you
it's
want.
Like, why are the Germans taking so much crap from this guy? And it's like, well, it turns out because he's making them billions of dollars is why they're taking crap from him. But he's manic depressive, and when the manic part's a real problem when he's got two jobs and both of them are sort of falling apart at once. And so it's things change. I pay attention to all the management teams, the execs they're making, the decisions they're making, because you can tell when something's right and when it's wrong. It's Nike. We talked about them before. They spent $20 million running Caitlin Clark ads on the Super Bowl. They don't even sell a Caitlin Clark shoe. They're going to have her under contract for 2 years before they sell a Caitlin Clark shoe. This is not a company that's thinking with both sides of their brain. I'm not sure which lobe is in charge of, if we pay someone, maybe we should monetize them through products, but it's not them.
While we have you, Jeff, we'll take one more question, Spencer.
One more. Okay. Thoughts on the turn at VF Corp, specifically the Vans brand?
I'd love to. The Vans aren't going anyplace, but it's going to be a while. We talked about the Crocs Hey Dudes problem before. I think Vans is facing a little bit of an issue in terms of the headwinds. I live in San Diego, man. The kids love their Vans. They wear them all the time. They're not wearing them right now. It's gonna be a while. It's that said, VF Corp will figure out a way to make money. I just think there are better, sexier ideas to be out there.
All right, ladies and gentlemen, like I said before, if you're watching on Stock Market TV, please scroll down, sign up for the Retail Roundup with my man, Jeff Macke. If you're watching on YouTube, just click the link in the chat. And if you're watching on Twitter, I will retweet the link for you to sign up for the Retail Roundup. Mr. Jeff Macke, the man, the myth, the legend, here with us, talking retail, talking to the consumer. 70% of the United States economy, kind of a big deal. Many leather-bound books, offices smell of rich mahogany, all of those things, right?
Yes, a little cognac, a snifter, a smoking jacket, and we can sit around and talk old school merchandising.
Yeah, I just did 200 curls. I don't know if you heard me counting. All right, guys, I appreciate you being here. You could be anywhere in the world, but you're here with us, and we appreciate that. Mr. Jeff Macke, thank you for being here. I am JC Perez signing off. See you on the next one.